everybody, we're back again with Anna Benz to talk about some of the non-QM and jumbo, kind of what's to come. So, we kind of know where we've been. So what's brand new on the horizon, or kind of where do you think we're going to be in the next 6 months, a year from now?
Well, we just released an I-10 program, which is exciting. We've been working on that for a while. And we also just released being able to do true log homes. So that is another one.
In the ITN, that's if you don't have a social, correct?
That's correct, okay. Yeah.
And the big thing on that, correct me if I'm wrong, is we're doing this in-house, right?
That's correct,
so
yes.
Normally that's been around for a while, but it's always been a brokered situation, which can always go south.
Yes.
Right.
Yep. So now we're doing it in-house, yeah. Investor came to us and said, really, how do we do business with you? What is it that you need? And what we do, we're very thoughtful about that. We'll look at all of the multiple offerings that we have, and we'll say, from a credit point of view, where is there a need? And so we'll go to an investor and we'll say, okay, this is where the need is, and we have a slew of investors and slew of programs waiting to be delivered and released. We can go to the investor and say, right now my biggest need is this. Can you fill that need? Mm-hmm. And that's exactly how we came up with this 85% LTV I-10 and true log home option, was because an investor came to us and said, we'd like to do business with you. What's it going to take to get us to the top of the pile? And I said, I need a true I-10 and a true log home. Yeah. Can you make that happen? And they said, yes, we can. I'm like, can you make it happen at 85%? Yes, we can. Well, fantastic. Let's do business together.
Perfect. We've got areas for sure where log homes, all of the Smoky Mountains and Gatlinburg and Chattanooga, and actually there's some dotted around Nashville, believe it or not. But there is a need for sure.
Absolutely.
Yeah.
And then were you saying something about the DSCR loans? And just kind of quick history lesson. So that's where those typical loans, the mortgage payment compared to the projected rent, right? So normally on a DSCR, you want your projected rent to be equal to the mortgage payment. And a little background on that too is it's, you may have a lease, but it's also what the market supports, right? Mm-hmm. So when we're doing that, you've got to have market has to support that rent.
Correct.
And sometimes that can be a stumbling block with where's the mortgage payment versus projected rent. Yeah. But now you've got to work around for that?
Yes, we have a zero ratio DSCR. So it doesn't matter what your ratio is, we can still lend on that. So in an environment where maybe the rates are a little bit higher, that's a very powerful tool. If the borrower has the money to do the down payment, then they could still purchase a home, and it doesn't matter what your DSCR ratio is. I also think that our ability to lend on a DSCR purchase using projected short-term rental income is also a very unique advantage that we have. We don't have to rely on the appraiser to tell us what the rental projection is on that property. We actually can use AirDNA. So you just go to this website, you put in the subject property address, it comes back and says, this is what we think the rental income is going to be, and you can use that to qualify. So instantly, it enables you to help your borrowers figure out really quickly what is the dollar amount that they can qualify for.
Right, and just given the interest rate environment that we've had, this ability to have that zero DSCR, that's a big deal, because there's been a few where we just couldn't get, whether it was AirDNA or lease, get it where it needed to be with the PITI. So
exactly.
That's a big win.
Yeah, and I think with the, homeowners insurance increasing, taxes going up, all of those things are things that an investor has to take into consideration when they're purchasing a home. So having the option of knowing, I know I can manage this payment, is a very powerful tool for you to use for your borrowers and with your real estate agents, partners.
Yes, and I think I was reading too, is there a piece of jumbo that came into play with this too?
Yes, that partner does also do jumbo, and so we are in development for additional offerings with that partner. Okay. So there's a lot of new programs coming, which is exciting. Yeah. It's hard to keep track of it. We have so many options for you to be able to get the loan across that finish line and to be able to say yes.
Right.
And on the jumbo field, I like the fact that we've got multiple avenues for it follows the automated underwriting.
Oh, yeah.
It doesn't ask for tax returns just to get tax returns, and makes that easy on the jumbo.
Yeah. It's probably one of the easier jumbo loans in the entire industry, is one that is driven by the AUS, and we have 4 options today just in that space.
And AUS, that's the automated underwriting system, so it just means it's going to shortcut and limit what documentation you need and help you get it approved.
That's correct.
Anything that's, where you think it'd be 6 months from now or a year as far as in some of the non-QM, where you think that's going in the future and what we're likely to see?
I think that you're going to continue to see a lot of advancements in the DSCR space. More of our investors will look into that space and try to figure out how to be competitive against each other, right? Mm-hmm. That's such a emerging, growing piece of the market. I do believe that more investors will be finding better ways to automate bank statement income analysis to make it easier for us to get a dollar amount up front. I think that as the competitive nature continues, you will get expansions in LTVs, going higher LTVs, higher loan amounts. I think we're pretty aggressive. We go up to $3.5 million on in the non-QM space, $5 million in the jumbo space. But as investors get more comfortable with the non-QM space, they will continue, and not only just get comfortable with the non-QM space, as more time goes by and that they see how well the non-QM loans actually perform,
right.
Then there's more market acceptance for that, and that's when the competition will really come in to try to see how can we prudently become more aggressive and be a part of the solution to get people into homes. Mm-hmm. I love that our non-QM space is not all high dollar amounts. Like, we're down to $100,000. Yep. So you have creative ways to be able to get first-time home buyers into a home by looking into the non-QM space. So that's another advantage, and I feel like more and more investors will start to lean into that space.
Thank you. It's been a very informative chat.
You're welcome. Thanks for having me.
We look forward to all that new loan product.
I know. I'm excited too.
Thank you.
Thank you.